Greetings, fellow traders. It's Jason here. It is Tuesday evening, the 25th of July, 8:03 p.m. Hope you're doing great today and that your trading is going well for you as also. Just getting a few things set up here. I had to change my screens around a little. Let's see. Yeah, this should be coming through okay, I think. Yeah, I think so. All right. So, how's it going? MGK, nice to see you all here. As Nick has discussed here over the last couple of weeks, we've taken the liberty to make our little Tuesday, or my Tuesday evening streams into a few little trading lessons. Some of these things are really important things that you might not realize if you're new to trading. Other people who've been trading as long or longer than myself might find that some of these points are still worth reviewing, and there might be a couple new nuggets that you pick up as well. So today I'm going to give you a little overview about how to treat your Forex trading as a business. So I have a few things here that I have put together for you, and I wanted to review them. Let me make sure I got the volume all set up right. How's it going, Fiona? Hope you guys are doing great. I'm still in the pound dollar trade, by the way. If you're watching, I have some others here I was going to bring up with you here, possibly at the end as well. But let's get right into it. How to treat your trading as a business. Number one, there's a huge potential in the Forex. We all know that. The Forex market, what is it now? 5 trillion a day, $6-7 trillion a day traded. The potential is absolutely huge. I've seen all sides of this. You know, I've seen people change their lives for the better. I've seen people lose everything, max out credit cards. I have people that I know who went bankrupt from trading, but I also have people knowing that retired from trading. So the potential is huge. The reason that Forex traders can sometimes get a bad rap is that there's a lot of volatility and there's a lot of leverage available to traders in the market. So there's a lot of potential to make a lot of money or possibly lose a lot of money. And we're here to help you not make the same mistakes that were made in the past by a lot of traders, including myself, so that you can have more success in your trading. The first thing I like to cover is a business-like environment. Look, I touch on this here from time to time, but the key is, you want to have a professional business. You have to treat it like one. So you have a good environment. You have a good trading desk. Maybe you have some areas that you can focus in. You have something that has decent temperature. You're not sweating or freezing. Something where you can concentrate on the markets. Somewhere where you can look at fundamental analysis, technical analysis, talk with other traders if you'd like to do that, and have a business-like environment. Here in the States, any type of business-like environment is a tax write-off. I think it's the same thing most places in the world. You can write off your expenses. Here with the home office deduction in the US, if you work from home, you can write off a percentage of your cell phone bill, your internet connection. You can write off your trading equipment if you use it mostly for trading, like computers, that type of thing, lighting, chairs, desk, that kind of stuff. And of course the cost. Something that a lot of courses and so-called sort of gurus don't talk about much is the whole point of keeping the Forex trading business running smoothly, and it's on between your ears. So this business is run in your mind. You don't have to have employees to trade. You don't have to have an office that you lease. You don't have to have a lot of upkeep. You don't need liability insurance and disability insurance and all these sort of expenses that can run up other businesses. It's basically between your ears. So you have to treat your body like the temple that it is, which means exercise, meditation possibly, getting plenty of sleep, having enough focus. But most importantly, if you don't do those things, because it's not easy to do, right? I mean, I don't do them all perfectly by any means, but if you don't do them, be able to acknowledge that you don't do them and be able to realize that you're not in the correct state, the correct environment, the correct mindset to be successful with your trading. Look, how many times, and I'm not looking at the chat right now, so I can keep my focus, but how many times have you heard, either from yourself or a friend or someone in the chat room or anywhere in the Forex business, that they build up an account, little by little, they're patient, they're working it, and then they just go crazy and they blow the whole thing out. You know what I was going to say, right? They blow the whole thing out. And that can be due to stress. It can be due to life stress. Maybe there's problems in your relationship, problems at your other job if you're still working. Maybe you were sick, or you're trading at 3 a.m. in the US trying to hang on through the London session, and you're not able to stick with it the whole time. The explanations and possible scenarios are endless. But what I'm trying to get the point across to you is take care of yourself, take care of your mind, because that is your business. Andrew showed those slides last year. You know, there's a pie chart that showed that a certain percentage of your trading is strategy, a certain percentage is money management, and a certain percentage is psychology. And psychology is the most important, but it's the least sexy and least fun thing to talk about, but it is the most important. So if you keep a good mind, you can have a good business here with Forex trading. So that's the point I wanted to make for you on that. Next one, again, these are some things that you might already know, but treat Forex as a business, not a hobby. If you're doing it just for fun, that's fine. If you're doing it to learn and you're starting small, that's fine. But don't do it if you're going to be, you know, putting your toe in the water and testing it over and over and over again and going to the next shiny thing and trying to get the next app and the next EA and the next broker because they're, you know, 2% cheaper, or they got, you know, more support, or, you know, trying to find out the next moving average cross, or trying to find the next, you know, indicator or oscillator that you can use either trading. Treat it as a business. And I bring up the examples all the time, but you can think about it like a coffee shop. You can think about it like a flower shop or an auto body shop, whatever it might be, wherever you are in the world. I know there's a lot of people who watch these videos all across the world. I even think the majority of the people aren't in the US here, but whatever business that you can think about this as, imagine the door breaks on your business. Maybe it comes off the hinges. You don't just shut it down and say, oh, I'm going to go on to do the flower thing now instead of the auto thing. No, you stick with it, right? You stick with it. You make the repair, you learn, you hope it doesn't happen again. Maybe you get a better door this time. Maybe you have a sign and a warning on the door this time. Maybe you get some extra equipment and you train your staff to learn how to not have the same problem happen again. But the point is, you work at it and you continue to move forward and you continue to build your business. If it's a hobby, you give up. You have good days, you have bad days. Sometimes you don't come back for a couple of weeks. Some days you're all crazy and you're maxing out every credit card and bank wire you can. If you treat it like a business, you have a business plan. And we talked about that in our last lesson that we just covered. So, you know, I can go off on this. What do I have on my little note here? Control your emotions. I think I skipped the 1 point, 2 points. Create a trading routine that matches your schedule. So if you trade full time, you can do whatever you want to do, right? If you work a 9-to-5 job, maybe you get up extra early to try to trade before work. Maybe you don't touch the charts until you get home from work and until after your dinner is done, so you can be focused and relaxed. Whatever works for you. And that's why I come back to that trade journal. Keep track of your mistakes, just like you might want to keep track of your successes. Because when you look back over weeks and months, you can find where your strengths are. It is so hard. I mean, listen to me. I have as many college degrees as I could possibly have, right? And psychology, everything, right? I still didn't realize the mistakes I was making in the beginning because I didn't have anyone to tell me to watch for it. So I would do good, do good, do good. And in my mind, I thought, man, I shouldn't trade the dollar CAD. I don't do that good on it. But I wasn't keeping track of how I do better in the mornings compared to the evenings, or how I do better Tuesday, Wednesday, Thursday, and Friday morning than I do Sundays and Mondays. And you can pick up on that over time, but until you really write it down and you can look back, say 2 months from today, back 2 months. If you can look back at your trades that you did back in January and February and just sort of flip through them when the market's slow and see the patterns that are there. Maybe you put them in a spreadsheet so you can track it and graph it. You can do whatever you want, right? There's probably programs online you can use to track that. But until you can have that information to look at, you could give it to anybody that doesn't even know how to trade, and they'll say, look, man, don't trade Sunday nights and Mondays anymore. Don't trade Fridays afternoon. Avoid these 4 pairs because these are the ones that you blow everything out on all the time. And there you go. You just saved yourself a lot of headache going into the future. So my advice is to treat it like a business, which means keeping a journal. At least you can make it as simple as you want. Even if you just have Post-it notes laying around, it's totally fine. And then trade a plan that matches your psychology. If you're a gambler, if you're a gambler. I got an email today from someone that said, I'm trying to find the best broker I can. What's going on with all this stuff in the US? Why can't I get a broker here? And I recommended a few to them and said, here's what I use. Here's what I used before. Here's what I would avoid. And they said, look, I'm on Social Security. I can't risk, if I lose $500, it's going to be the end of the world because I'm on a fixed income. And I said, look, man, I don't think this is for you then, unless you're okay with putting in time and effort to try to make $20 a week or something. I mean, you're going to basically just have to gamble it if you want to change your lifestyle, right? So trade the way that your psychology allows you to trade. If you get really nervous, if you lose 1% of your account or 2% and you can't sleep, then you have to cut down the risk. You have to cut down the lot size. You have to cut down the number of trades. If it doesn't bother you, if you blow out half of your account and you could care less, then you need to look at money management. Maybe you're not respecting the money. Maybe you can do some of the little tricks that I've done where just the other day, what was it? Today is Tuesday. On Sunday, me and a lady and some of my friends, we went out to eat at a really nice restaurant. And I used my debit card that has all my trading money that I've just withdrawn in the last month on it. And it was sort of fun because I took that card out, put it in the slot, gave the server a really nice tip, and I said, hey guys, this is all paid for from trading. It's paid for from my business. So it's sort of nice to be able to feel that, because when you spend $100, $200, whatever it might be on a really high-end meal, or you buy something, I could tell you some other stories, but I'll save you. Then you see it. So I don't want to bring it up here, but I have a couple things that I purchased specifically in my home that I probably wouldn't purchased if I wouldn't have had the income coming from my Forex business. And when I see those things, that I walk by them every single day, every time I walk around the house, I think about it. Like, hey, this was paid for from trading. And I can value the money. Because it's the same thing if you go to a casino and they give you these chips, right? Because when you're throwing around chips, like at the roulette wheel or blackjack, that's the reason you're not throwing around money. They don't want you to think about it as money. They want you to think about it as chips. And then you get the cash at the end. It's sort of the same thing with trading. You see all these numbers on the screen and they go up and down, and some people are making 50 times more than you, and it doesn't really hit home until you actually put a value on that. Put a value on it. So if you're too loose and you're too reckless, think about what that money could do. Maybe it doesn't bother you if you spend $1,000 this week on something and you just blow it out on a trade that you could have had a stop set, but you forgot to set it or you didn't want to. But if you take $1,000, I mean, you could have a nice meal. You could put some money in a retirement account. You could fill the gas tank up on the car. You could go out to eat, like I was saying. You could buy yourself a nice shirt or a new chair for the house or something like that. Maybe you want to have buy something for whatever hobby you have. I mean, it could be anything. Hunting, fishing, motorcycles. Maybe you donate a little bit to the animal shelter. You get a value to that money. That's the point I'm trying to get to you. And the next one is repetition is the mother of skill. There's a saying, I don't know exactly the way it's worded, but I think it is something on the order of people sometimes set too big of goals and they're too hard to reach, and people get frustrated when they don't reach their goal. But it's all the little habits that you have, the repetition that you have, the bite-sized ways that lead you to the goal. So not everybody reaches their goals, but everybody can create and change a new habit. And changing your habits and enforcing those habits repetitively can lead you towards your goal and changing your life. However, you might want to change it. Look, when somebody says you want to change your life, a lot of people in this niche think Lamborghini, helicopters, big mansions, debt-free. You don't have to go to a job. But for some people, it might just be working one less day a week, Or maybe using this money to pay off one credit card and save them a $500 a month payment every month. Maybe it might be leasing a new vehicle and getting rid of the beater. That can be a big life change. So in between the extremes is where most people find their comfort zone. It's not what you see online, but it's the way it is. It's the truth. What you want to have is a repetitive habit that you can create to make this a professional business and treat it like a business. You don't want to go for that miracle weight loss pill and, in 2 weeks lose all the weight that took you 3 years to put on, because it's not going to happen. And if it does happen, you're not going to be able to keep it off anyway. So it's easy to see the shiny thing and get distracted and want it all right away. But the real way to do it is slow and steady to win the race. You can have good days, good weeks, but slow and steady wins the race. That's just the way it is. That's why I've been here in this business over 10 years. Made a lot of mistakes in the beginning, set my course, changed my path, and here we are. Next one. Let's see, where am I here? We talked a little bit about how to treat it like a business, but I wanted to bring up the fact that when you trade Forex, it's purely a business transaction between you and the broker. So taking your emotions out of this business is not easy, but it is one of the keys to success. The less emotionally charged you can be and the more repetitive you can be to gain that small advantage, the more successful you'll become. So you might remember my story about my friend back in the day who, I'm sure you've all heard this, or unless you're new, but he always let his stops, not always, but most of the time let his stops get hit, but he would never let the take profit or the target levels get hit because he saw the money and he wanted it. And he didn't have the guts to let it run, and whenever it didn't succeed, which was quite a bit, he would take it personally. Like he would say things in his mind. He would say, I'm not good enough for this. This is all just random and luck. The broker's out to get me. I don't think anybody doing this really can do it for real. I think this is all sort of a scam. I've lost so many times. We've all heard it before. You probably said it to yourself many times, maybe even today, maybe even the last hour. But if you think about this like a business and a truly business transaction and a zero-sum game, some people are going to win, some people are going to lose every single second of every single day. It has nothing to do with who you are as a person. It has nothing to do with, how your lifestyle is. You can think of extreme examples. Some of the big flashy people with the big houses and Lamborghinis, they might be the worst traders. Maybe they don't even do it themselves. Sometimes the person in the old beat up laptop and cell phone only trading with the ripped up clothes has the best strategy and technique in the world, and they're just on their way to the top. They just started, give them a year or two or three, and they'll have all sorts of people wanting to throw money at them. So don't take it personally. Anybody can make this work. It's truly a business transaction between you and the broker. It's not a personal vendetta for the positive or for the negative. Next, we're going to talk about false confidence, luck versus skill versus the best of both worlds. I have told all of you in the room for months and months since last year that I think it's more dangerous to get lucky right away than it is to be losing your butt right away, because you get that false confidence, right? That false confidence can be very dangerous. My note here says to be realistic in your expectations, of course. And I talked about this last year as well when I did a video on this topic. But when I used to be the director of a health center in our department anyway, here locally, 15 years ago, 20 years ago, 15 years ago, we used to do what's called a SWOT analysis, where you look at your strengths, you look at your weaknesses, you look at opportunities that are around you, and then you look at threats in your area that make it hard to succeed. So for strengths, maybe you have a great strategy. Maybe you know people that have great strategies you can learn from. Maybe you have great money management skills, but you haven't yet found the right strategy, or you're not good enough to do it repetitively. As far as weaknesses, we know what those can be. Opportunities around you. Maybe the opportunity is that you have the chat room, or that you post trade ideas, like I highly recommend. If you want the best accountability, post a trade idea, because you'll get reviews. You'll have someone to bounce ideas off of. You have criticism that'll make you rethink before you post things. And you get the reward if it goes good. Whether it's, hey, thanks for sharing that, or it's money in your pocket. The threats around you that make it hard to succeed, though, can be your own emotions, your own timing, your own lack of, say, funds. Maybe you don't have enough money to trade successfully, right? Maybe you're a successful trader and you earn 2% every month, and that's all you can earn. Maybe you have a 1% month, 2%, maybe you hit 3%, but maybe you only got $1,000. What's 2% of $1,000? $20, right? So $20 a month is not going to be worth it for a lot of people to put in all the time and effort it takes to be successful. So that can be one of the threats around you. Maybe you have everything lined up, right? And I know I'm throwing out a lot of maybes, a lot of hypotheticals, but I'm trying to get you to see the point. Assess your strength, assess your weakness, look for the opportunities around you and among you. Maybe it's the experience that you have, or all the things you've learned and you don't do anymore. Remember, one of my golden rules, never add to a loser. That's just the way I do it. And never move your stops so they're further away. Those two things, just like splitting aces and eights at the blackjack table, can save you a lot of money in the long run. Then you have your trade idea and you look at all the things, or I'm sorry, the trade journal, and you look at all the things that are your strengths and weaknesses there over time, over months. You know, I can look back at my trades on this very week for the last several years and see what I've done wrong and see what I've done right. You think that helps me out? You think it gives me a little bit of an edge? You're darn right it does, right? So you want to know where you're at. You want to know what your strengths are, your weaknesses. Look for opportunities. Look for the threats around you. Maybe it's somebody, you know, I'm throwing out a lot of maybes like I just said, but perhaps you have a really solid trade idea to go long dollar yen right now. And I don't even have my charts up, so I'm just making up a story here. Don't take it realistically. But maybe there's 6 trade ideas that are selling and people telling you why you shouldn't be buying. You don't want to let other people's opinion influence what you have. So be strong in your head. That's the most important part. Real business, real expenses. We covered that quite a bit. We talked about tax deductions, computers, VPS, fees, equipment, software, time, education. If you buy a Forex course, that's 100% business tax write-off. Losses are expensive too, depending on your tax situation and where you live. I'm not trying to give you advice, but I'm just telling you, keep your yearly statements from your broker. Download them on a file, save them somewhere in a spreadsheet, put them in a safe deposit box, wherever, because you can pull some of those losses forward depending on your tax situation and where you live. Real business, real expenses. You want to preserve capital. Always use a stop loss. Never chase losses. Trade the plan. You've heard it before. Here's something that's good to think about. When you click a trade, maybe you're in a trade right now or you're going to be in a trade this evening, always know the best case and worst case scenario that can come out. You know, let me see if this is still going good. I think you can still hear me okay. Yeah. Let's see. I'm just looking at the chat here for a moment. Okay, good. So always know the best case and worst case scenario. That's what any good business does. You know, they know if you're doing an auto body repair shop, they're going to know how much their parts cost. They're going to know their profit margin on each part. They're going to know the best case scenario, the worst case scenario. And when I say worst case scenario, let's just say you have your transmission replaced at an auto body shop. The auto body shop buys the transmission. They change it for you. You're on your way. Everything's great. You had to spend a bunch of money. They got some profits. And next week, the stuff goes bad. Transmission blows. A good auto body shop will know that, is that part warranted? How much time do I have to get my money back? How is it going to be to get another one to replace? Where does my supplier get them from? What's covered? What's not? That's the kind of stuff you got to have planned. So always use a stop loss and preserve capital. That stop could be, as you saw when Steady Capture trades, he's got what you call a catastrophic stop, right? He'll have a take profit or a target of 9 pips, 15 pips, whatever it is, 18 pips, and the stop's 90 pips away, right? That's a big risk to reward, but the stop is there. You're not going to blow out an account with that trade. You know that. Maybe you only want to risk 0.5%, and you might risk a couple extra percent with a larger stop, but you know where you're at. Always know the best and the worst case scenario, like any good business owner should. Keeping records and journals, again, not exciting stuff to talk about, but you get the idea. It's important to do. A lot of you don't want to hear it. A lot of you don't do it. A lot of you never done it, but some of you do it all the time. And if you're doing it, you can agree with me that it works. Let's see. Video's frozen. Let me take a look. Yeah, it should be okay. You just have to drag it to the right if it's frozen. You can also watch it on YouTube if you want to. Yeah, it looks like it's coming through good. Might have to watch the recording if it's frozen for you. I have one more slide to show you. And let's see where I am on my notes here. Business plan, we talked about that. Yeah, we're going to cover that just a little bit. Get the proper training and education. Look, I have a bunch of college degrees. A lot of people do. I couldn't just get them by paying money. I had to go and learn and trade and get certified. Every couple of years, I have to take what are called continuing education credits so I can prescribe medications for patients. Things change in the world. You want to be up to date with your training, your education. Maybe you bought a Forex course 6 years ago, and that's the only one you bought. Maybe it's time to get another one somewhere. Get up to date with things. You know, the markets change. Forex trading changes. The brokers change. Everything changes with time. So don't be left behind. Being a part of this chat room, sometimes you hear good things, sometimes you don't, but it's there. And it's pretty nice because most of the time when there's a big announcement, we've seen it all in this chat room over the years, right? When there's a big announcement, you can look at it on a live squawk. I like to use financialjuice.com. You can follow Twitter. You can have Bloomberg on TV or whatever you want to watch. But all the time when there's something big going on, it's in the chat room. Whether it's Yellen speaking or like the FOMC tomorrow, you know, you're not going to miss out on the big things that are going on in the market when you're plugged in live in real time. Have the correct equipment. I get this question a fair amount. It's not lately, but you know, back maybe 6 months, 4 to 6 months ago, as we were revamping the site, people were asking about trading computers and how much memory to have, and you know, what kind of monitor should I get, and you know, and that kind of thing. You know, I'm on a different side here doing the live streams. I got certain lights that I like to use and cameras and microphones and things like that. But if you're just trading, having the right equipment is important, whether it's an environmental thing like a real comfortable chair, whether it's having the flexibility to have a laptop and take it with you when you're on the road, or have a mobile device with you. The correct equipment can also be a subscription to a live squawk. Maybe you want to have that news right on the second. You know, the list goes on. Having the correct equipment for any business is important. Next one, have a business plan. We talked about, I think it was just last week, the difference between a business plan and a trade plan. The trade plan is the details about the trade. The business plan is how much money you're going to put into your trading account, what broker you're going to use, how much profits you're going to take, when you're going to withdraw profits, where you go to learn. Are you going to be active in the chat room? Are you going to take advice from other people? You know, that's a business plan. And a business plan can be changed. You know, you have a 1 month, 3 month, maybe a 9, 12 month, 5-year outlook. And I'm not talking about the pretty spreadsheet where you have compound interest, you're going to make 5%, 10% a month forever, and in 2 years, you're going to be a billionaire. I'm not talking about that kind of thing. I'm talking about a business plan. Again, the title of this is treating your trading like a business. I'll go out on a limb here and say that the vast majority of people who I know who trade treat it like a hobby, not a business. You know, you're trying to make some money. You're trying to pay some bills. You're trying it out. See if it works or not. That's not how a business is run. A business is run in a serious fashion where you learn from your mistakes and you decide if you can do it or not. Like my flower shop example. If you hate flower shops and you try it and it won't work, you're going to lose your funding. You're going to lose your lease. You're not going to be able to pay your staff. The reason that Forex can be tricky is you don't have all the overhead that a brick and mortar business has. So it's easy to sort of tiptoe around and sort of hang around. I've seen it so many times. But treat it like a serious business. It'll reward you for it. Be accountable. I think this is my last point on the slides anyway. Be accountable. If you want the ultimate accountability, post the trade ideas in real time, or at least save them for yourself. Maybe you want to set up a MyFX book account just so you can get better breakdown of your own trading. Maybe you don't even share it with anybody. You don't have to share it. You can have a MyFX book account just for your own records. MyFX book and a lot of other ones, I think I don't want to name them, but there's several other ones that do similar things to my FX book, where you can track your performance. You can see the breakdown in your average trade holding time. You can see what pairs you trade, the percentage that you make in an hour, in a month, in a week, you know, that kind of thing. Having access to that kind of performance is absolutely critical in any kind of business, especially with trading. Whether you do it manually in a journal or you use something like that. I still recommend having a journal, because even if you do those things that's automatically linked to your trade account, you still can't put personal notes in there. I mean, maybe you can, but not as easily as just writing it on a note or in a trade journal. And you look at it all, you assess it. You know? Most of this stuff is common sense, but it's amazing. You know, look at it this way. I'll give you one more example. Why is there always ads around the New Year's for gyms and for hydroxycut supplements and how to get six-pack abs ads all over Facebook and YouTube? Everybody knows what to do. You eat good and you exercise. But not many people do it. And everybody wants to have fun and look for the next big thing, but they're not willing to put in the friggin' work. You know? So I'm looking at you as straight as I can, right into the camera here, and I'm telling you, if you want to be successful, you got to put in the work with anything. Whether it's a profession like mine, whether it's a trading contest, whether it's your own live account, whether it's a car shop or a flower shop, you got to be successful. To be successful, you got to put in the work. You know? The scary thing about Forex is there's so many traps and minefields there. There's so many ways to get you to lose. You can be too successful and go too big. You can jump from one thing to the other, and as soon as you jump from A to B, the A one takes off and the B one goes down, and you can have issues with your broker. You can take bad advice from good people and good advice from bad people and not know what the heck's going on. There's just a lot of ways to fail. But it's sort of like that old video game, what's it called? Leapfrog, where you leap from thing to thing. There are solid bases where you can build your business off of. You know, you don't want to build your business on sand. You want to build it on solid rock, right? A good foundation. And there's a lot of things that you can do to follow those good foundational beginnings. Right here at Forex Signals, the education that's there. Maybe watch back some of the videos, look at things. And it's all about distilling all the ideas that we offer. I know Andrew and Tony do a lot more streams right now than I'm doing. But take their information, make it your own. You know, look around online. You get the idea. So I'd like to have a little interactive discussion with you. If you, hopefully the video is not froze for you still. Everything is streaming just fine on my end. So all you have to do is just drag the YouTube video to the right if it's locked up for you, or you can watch back the recording. Just type in anything that you've had, a personal experience or what you heard of in the chat room in relation to treating trading like a business. I'm not giving tax advice, but maybe you have some tips that you want to share. Maybe a story about how a trading journal has helped you, or how being focused and avoiding certain days or certain pairs has helped you out, that type of thing. Let's take a look. Hopefully the video is running. I think the video's got quite a delay right now. It says we're still streaming, so what I'm going to do, because I think the video is delayed here with the YouTube stream, is I'm going to stop the stream here. I'm going to save this, and then once it gets uploaded to YouTube, I'm going to post the link, and I will share it with you, and you can take a look at it. And you can still type your examples in the chat room later, even if it's an hour from now, because there's always someone who'll give you some input on that. So I'll leave it at that for now. Thanks for watching. Have a great day. And just remember, treat your trading as a business. It's a serious business. It can change your life for the good or for the bad. So take all the little bits of information you can, make it into your own. Be aware of all the things you're doing. Try to find the patterns that you have that are good and bad. Eliminate the bad. bump up the good, and I'll see you on the other side. Have a great day and a great week. Take care.